Okay, right. So guys, very good morning to all of you. Guys, can you take out your exam kit and go to this question called guys Venus Corporation. So today and next week guys, we will be focusing on consolidated ratio questions. Okay, so we'll start off with a straightforward one. In your exam kit guys, could you please move into a question called Venus Corporation. Okay. Question number 443 from page number 163. Okay. Right. Question number 443 from page number 163. Okay. All good guys, shall we start then? Right. Okay. So guys, 443, look at the first requirement that they are asking, right? Required A part based on the extracts provided. Ratio question guys, always in word. Okay. Right. So guys, required A part based on the extract provided, calculate the following ratios for Venus Group and Venus Corporation for 2008 and 2007 respectively. Gross profit percentage, net profit percentage, and return on equity. Equity should include NCI where applicable. Okay, right. So they're asking us two types of ratios, right? First, they're asking gross profit percentage, net profit percentage, and return on equity percentage. So three ratios, guys, they're asking from you. Let's quickly have the equations ready. Okay, right. So in your book, guys, can you put the heading over there, right? Open a MS Word. Question number guys 443. Okay, question number 443. Right. So guys, mark it over there. Question number 443. Right. Venus Corporation. Okay. Okay. So guys, if possible, can you just set up a small table kind of thing? But remember, in your exam, if there is a table, they will draw it and give. Okay, so there is nothing for you to draw. If there is a table, they will mark that. Right. So guys, you name it as ratio, formula, okay, Venus group, okay. And then guys, the other one, Venus Corporation. Right. So guys, understand one is a consolidated ratio. This one guys, Venus group. Normally guys, group means consolidation. Whereas Venus and Co means what guys? Single entity. Okay, so in our book guys, they are asking from us three ratios, right? Can you guys write down the three ratios? Okay, gross profit ratio, net profit ratio, and also guys, they are asking return on equity. Okay, right. So what are the equations? Start writing guys. Gross profit divided by revenue into 100. Okay. Okay. Right. Then guys, this one over here, net profit divided by revenue into 100. Okay. What's the last one guys? They are asking return on equity, net profit divided by revenue into 100. Sorry, not revenue, divided by equity into 100. Okay. Done. Right. So guys, once you have copied these, can you guys quickly now start calculating guys? Now you read the question, right? What did they tell? From the extract, just calculate ratios. Did they tell you to adjust? Not really. Now last Sunday guys, when we did the ratio question, what did they tell? They said to adjust the financial statements and then start ratios. Today question is not like that. From the extracts calculate, meaning guys, you don't have to do any kind of changes, right? Whatever the numbers that they provide, you just take and copy it and you can start doing the ratio. All good, right? So anyway guys, I'll share the question to the group as well, right? Can you guys start calculating this one please? Okay, right. So guys, I'll give you 5 minutes. Quickly guys, calculate the ratios and then we can start doing the other things. Right? Should not take that long. That was Basel December 1st. I think December 8th also they should be recording it. I mean uploading it this week. So I think the question what they have been given to you was December 1st recording. December 8th also they will upload. Okay. So the loud and other half and the remaining are just remaining questions will be in that. One basket we'll have to check with them only. Okay. I'll check and see another one time. Okay. Just drop a message to them and also keep. Then that will be better. Okay, right. Guys, now let me quickly calculate the ratios, little bit, see whether your answers are okay. Right, first one, guys, we have the Venus group. Okay, so starting, guys, we need gross profit. So gross profit will be, guys, 12,500. Here the gross profit will be 11,000. Right, divided by 39,000 into 100, and over here, guys, it has to be divided by 32,000 into 100. Okay, then, guys, on the other hand, we have net profit. Net profit, guys, should be 9,800 divided by 39,000 into 100. Right, once again, guys, we have 8,900 divided by 32,000 into 100. Okay, right. Then, guys, next part, again, net profit 9,800 divided by equity 87,500 into 100. Over here, guys, 8,900 divided by 42,000 into 100. Okay. Now, so these are the answers, guys, what I have got when it comes to the ratios, right? So I just copied the numbers, guys, directly from what you can say the question. I did not do any kind of adjustments. Okay, right. So little bit, guys, can you check and see your answers? So according to a student, I have got an answer. 1 minute. Okay. Yeah. Guys, first one, 32.05% approximately. Guys, I'm taking an answer from a student. Little bit, see whether these are okay. Two people have sent me the same kind of answers. Then, guys, the other one, 34% approximately. Okay. Next one, 34%. Okay. Then, guys, when you go for the next one, net profit ratio 25% approximately. And the other one, guys, over here, they have said the answer as 27.18%, or maybe 27% approximately. Let's take it as that value, 27% approximately. Or is it 28? 28. Okay, so let's go as 28. Done. Okay, then, guys, next one, we have the return on equity. I am getting two answers as 11 and 21. Is it okay, guys? 11%, and the other one, guys, over there should become how much? 21% approximately. Right, little bit check and see, guys, with these answers where things are okay with you quickly. Okay, now, guys, with these answers, right? Okay. Right, now, guys, let's go for the second part of the question. Let's see now what they're asking. Okay, right. Okay, now, guys, over here what they're asking, required A part. Now, required A part, guys, we have finished 3 marks. Okay, right. Now let's go for the B part. Right, Roman number 1. Calculate Venus consolidated profit for the year as if the acquisition of Luto had not taken place. Your answer should take account into information provided in notes. Your answer should also recalculate the net profit percentage. Okay, now, guys, before we read this, let's quickly go through the paragraph, guys, one more time and see. Okay, first one. Venus Corporation acquired 70% of the equity share of Luto, its only subsidiary, on 1st January 2008. Now, guys, point to note. Look at this. Now, Venus Corporation single entity. Single entity means what? Only Venus numbers are inside this. Understood? Right. Venus Group consolidated. Consolidated means what, guys? Consolidated means Venus answer is also inside. Luto's answer is also inside this statement of profit and loss. Both people's numbers are there. All okay? Right. Now, guys, look at this. 30th of June 2008, we bought the company on January 2008. How many months subsidiary are we looking at, guys, over here? Very good. It's a 6-month subsidiary that we are looking at over here. Okay, 6 months. Right. On reviewing the consolidated financial statements, Vinicius Jr., the managing director, was disappointed and commented that he expected to see high gross profit due to the receipt of discounted purchases from Luto in the post-acquisition period. He has remarked that the acquisition of Luto has not had a positive impact that he expected. Okay, now guys, they have given you the numbers. Right. Now guys, look at this paper. There are 5 adjustments that they are speaking about. Okay, 5 different adjustments. Okay. Now guys, listen. This is the second requirement of the paper. Now, second requirement of the paper, guys, they are asking you to do something like this. Okay. Now guys, can you put over there adjusted profit of Venus? Right. Put the heading really that way. Right. Adjusted profit of Venus. Right, adjusted profit of Venus. Okay. Okay, guys, again, one more time. Can little bit look at this requirement, guys. One more time, look at this, will you? Calculate Venus Corporation consolidated profit. So consolidated profit means, guys, this one. Now let me go up, will you? Right now, guys, here can you see consolidated net profit is 9,800. Okay, now guys, first mark it over here. Right, drafted profit. Okay, start writing it this way. Drafted profit. Okay, what's the answer? Right, 9,800 it seems. Right, mark that one, will you? Right, drafted profit 9,800. Okay. Right, are you guys all okay with that part? Right, now what they're telling. Okay, let's continue the question. Right, as if the acquisition of Luto had not taken place. Okay, now guys, what they're telling you to do is this. Now look at this part, guys. Now there are 5 adjustments in your paper. Now they are telling you to recalculate this answer assuming Luto is never there. Now 9,800, guys, how did we get the answer? That is Venus and Luto together, no? Now what they are telling is this. Between Venus and Luto, 5 things took place. 5 things means these 5 things. Now they are telling you to adjust. Adjust means you now think Luto is never there. If Luto is not there, take these 5 adjustments and I want you to, guys, recalculate your profit and show it to me as much as possible. Right, start doing that part, guys. So what you do is you do it this way. You read the question and see, okay, if Luto is not there, what will happen to my 9,800? Will it go up or go down? Start adding and subtracting the numbers. All okay? 5 minutes, right? Start doing this one, guys, as much as possible. Whatever that you can, that's it. Okay, right? Start, will you? So little bit of a tougher part, right? Okay, just try and see whether you can do this part, guys. The 5 adjustments, can you try to do plus and minus, whatever that you can. Okay, plus and minus. Right, so guys, I'll little bit go for, I'll zoom in, then you all can look at this much better and do it. Okay, right. Start adjusting these 5 points. You just take the number and see if this is not there, what will happen to my profit? Will my profit go up or go down? That's it. Okay. So guys, also take into consideration this, how many months subsidiary? 6 months subsidiary, yeah? Right, take that also into consideration. That's the corrected answer, no, Shahla? After doing all the adjustments, is it? Yes, correct, Daniel. Yeah, but Daniel, when you're doing the adjustment, do take the number of months into consideration. Okay, when you're doing the adjustment, do take the number of months into consideration. Just think and see what will happen to the profit. Does it affect the profit by any chance? That's it. Okay. Okay, right. So guys, can you little bit check and see with your answers for this part, the adjustment of profit, right? Okay, now guys, first one they are telling you, okay, right. Luto has recognized a revenue of 5 million, which resulted in a net profit of 2 million. Okay, now guys, first of all, can you tell me, are we going to take the 5 million or are we going to take the 2 million for this adjustment, guys, over here? What should we take? Right? We should take the 2 million. Because why we should take 2 million, guys? Because what are we adjusting? We are adjusting the profit. So only the profit you have to take into consideration. Then what about the 5 million, guys? Listen, that 5 million has been given for another purpose. So first thing, guys, what you should do, you should mark it over here, profit. Guys, now think, if Luto is not there, will we get that 2 million profit? No. So therefore, guys, what you should do from this drafted profit, guys, you have to now remove this 2 million. Okay, right? Can you guys remove this 2 million over there, please? Okay, right. So we have to remove 2 million rupees. Done. That's it. Okay, guys, let's go for the next one now. Since the acquisition, Venus is able to buy goods from Luto and there is a saving of 500,000. Now, guys, think, if no, we don't need to take away the 5 million from revenue, because from that revenue, the profit is 2 million. That revenue has been given for another purpose. Okay. Right, guys, second paragraph. When we buy goods from Luto, we are saving 500,000. Okay. Now, when Luto is not there, will we be saving that one? No. Then, guys, if we don't save, profit will go up or go down? It should go down. No, it has to go down, because guys, we are saving. No, if it's not there, we can't save. So therefore, guys, what you should do, that discount, right, you have to remove from this one another 500. That's it. Done. All good, right? Guys, let's go for the next one now. The consideration of acquisition consisted of a share exchange and an additional 5 million to be paid on 1st of January 2009. Okay, now guys, look at this part. 1st of January 2009, we have to pay 5 million. What do we call this in accounting, guys? If we have to pay in the future, what is this called in accounting? Deferred consideration. Exactly, right? We call it as a deferred consideration. So normally, guys, when there is a deferred consideration, you have to do two things. Okay, right. Right. So guys, what are the two things that you have to do, guys, when it comes to deferred consideration? First thing, what you have to do, find what value? Find present value. How to find present value? Take the future value and multiply with what? Discounting factor. Okay, now guys, look at the question one more time. In the future, how much we have to pay? 5 million. Okay, read the paragraph and say, guys, what's the discounting factor they have given? 0.926, is it? 0.926. Yeah. Now, guys, first multiply this and see what's the answer we are getting in that case. 4,630. Good. Guys, listen. Present value will not affect the profit. You know why? Present value, we normally take it to SOFP. So it doesn't affect the profit. Right. Now, guys, step 2. After we find the present value, what is the second thing, guys, we do? Unwinding the discount. Exactly. So, guys, how to unwind discount? Take the present value and multiply by percentage. Correct. Okay. Right. So, guys, what's the present value now? 4,630. What's the percentage? 8. But guys, you have to be careful. How many months subsidiary are we looking at over here? 6 months. Because guys, now when you do this part, you get the answer for 1 year, right? But the subsidiary is not for 1 year, no guys. Subsidiary is only for 6 months. So therefore, you have to see this one into 6 over 12, right? Check and see, guys, and what will be the answer in that case? 185.2. So guys, shall we take it as 185? Okay, let's take it as 185 approximately, because I believe in this question they are telling take the numbers to the nearest whole number. I believe, have they said something like that? No, right? But anyway, guys, let's go as how much, guys? 185, right? So 185, guys, should be the answer. Okay, guys, now think of this as what? Interest. Okay, basically, guys, unwinding of discount is what? Interest. Okay, right. Now, guys, can you go back to your profit calculation? Guys, now think and tell me, if Luto is not there, will this interest be there? No. So should I add to my profit or subtract from the profit? Add to the profit. Very good. Right, start marking, guys, over here. Right, unwinding of discount. Right, unwinding of discount. Right, so it's like interest. No, guys, interest is normally what? Expenses. Right. Right, minus 185, sorry, plus 185, right? Because I have to now add back to my profits. Okay, are we guys all okay with that part? Right, then guys, let's go back to the next adjustment, what they are telling. Okay, right, guys, adjustment number 4. Can you guys calculate depreciation for me faster? Okay, adjustment number 4, please calculate and give me now depreciation. Right, guys, we have to calculate depreciation for how many months in that case? Only for 6 months. Only for 6 months you have to calculate depreciation. Okay, start doing that part, guys, for me. Calculate depreciation for 6 months. Okay, guys, how to calculate depreciation? Look at the paragraph. How much has the fair value gone up by? 900. How many years? 3. So 900 divided by 3. But that's the answer for 1 year. Are we doing for 1 year? No, only for how much, guys? 6 months. So then that answer you have to say into 6 over 12. So what we will be getting, guys? 150. Now 150 is what, guys? Depreciation. Now if Luto is not there, will we be having this depreciation? No. So the profit then, guys, should go up or go down? It has to go up. Profit has to go up, right? So guys, mark that one. Depreciation, what's the answer? Positive 150. You have to add back 150. Okay, you have to add back 150. Okay, that's it, guys. Now, guys, can you quickly adjust and give me, guys, the corrected profit now faster? Right, please check and see now what's going to be the corrected profit. Right, so guys, please correct and see, guys, the profit. How much is it going to be in that case? 9,800 minus 2,000 minus 500 plus 185 plus 150. How much, guys? 7,635. Yeah, 7,635 should be the answer. Okay, guys, now listen, this question is not yet done. Okay, guys, look at this part. Now what they are asking, okay, your answer should also recalculate the net profit percentage. Okay, now they are asking for Venus group. Again, calculate what? The net profit percentage. Right, now, guys, another one time, let's start calculating that part over there. Right, so put there net profit percentage. Okay, another one time we have to calculate this one. Right, net profit percentage. Okay, let's calculate net profit percentage another one time. Okay, Right. So guys, normally net profit percentage, guys, what's the equation? Equation will be profit divided by revenue into 100. Okay. Profit divided by revenue into 100. Okay. Guys, now you should take what profit, the old one or the corrected one? The corrected one. Now you should take the corrected one. Understood, guys? Okay. What's the corrected profit, guys? Now 7,635. The answer that you got. Okay. 7,635. Okay. Guys, now listen carefully. Divided by revenue. Now, for the revenue, now there is a small adjustment that you have to do. Okay, now guys, can you do the adjustment and show it to me by referring adjustment number one more time? Okay, now the revenue is 39 million, but in adjustment number 1 there is a small thing that you have to do. Can you guys adjust and now mark it faster? Yeah, very good, Basil. Right? Okay, can you adjust and now mark it over there? Exactly, that should be the revenue. Guys, now see, total revenue is 39, but inside this, how much from Luto? 5 million. So if Luto is not there, guys, will we have that 5 million? No, we won't. So therefore, guys, the adjusted revenue has to be very good, 34 million. Right now, guys, can you find the answer, please? No, because they are asking you to take what you can say. And remember, the single entity is for 2007, the consolidated one is for 2008. They are asking you to recalculate the consolidated one. Okay. Right. So guys, I'm getting the answer as 22.456%. Correct? No, guys, that has to be the answer. Right? 22.456%. Okay, all good, guys. So with that one, now we have done that part also. Okay, right. Now, guys, let's see what is the next question they're asking from you. Okay, explain why consolidated financial statements are not comparable to those of the single entity, for example, Venus Corporation. Right, guys, now they are asking from you a very basic question. Right, what is the basic question? They are asking, why can't you directly compare a single entity with a consolidated financial statement? Why can't you directly compare? Right, can you guys start writing for me reasons this way, guys, faster? Okay, can you write and give me a few reasons why we can't compare single entity with consolidated financial statements? They're asking some reasons. Okay, can you guys start writing for me why you can't compare directly that way? Okay. Right now, guys, when it comes to income statement, what's the main problem that we have in comparing single entity with consolidated financial statements? Income statement, what's the main problem? Single entity has only whose numbers, guys? Only parent. Consolidated will have parent and subsidiary. Very good, right? So first write that answer, will you guys, over there, right? Why can't we compare, right? So first write that as the reason why we can't compare individual financial statements with consolidated financial statements. So start writing this way. First start writing with income statement. Okay, single income statement will only include parents' income and expenses. Okay, consolidated income statement will include both parent and subsidiaries income and expenses. Right, first write that one. Okay, why can't we compare directly that way? That means, Amjad, what's the meaning of that sentence? Yeah, correct. Yeah, so they are asking why we can't compare a single entity with a consolidation. What is the reason why we can't compare? Even if you go to compare subsidiaries, individual income statement with consolidation, same problem, no? Right? Because consolidation will have two people's answers, while individual income statement will have only one. Yeah, because here they are asking Venus Corporation. That's why I'm answering according to the question. Okay. Okay, now guys, income statement, now you all have what you can say guys explained about that. What you have explained, right? When it comes to single income statement, we only have one person's income and expenses. Consolidation will have parent and subsidiary both. That's the problem with guys income statement, no? Right? How about guys problem with SOFP? In SOFP, what is the problem that we have? Now when you take Venus SOFP will only have what? Venus's assets, liabilities, and equity. But guys, when you take consolidation, what are the problems that we have? We have both whose and whose one? Parent and subsidiary. When it comes to guys SOFP, consolidation, assets and liabilities will have both Venus and Pluto. That's one issue. Right? Equity. Right? Equity guys will only have whose equity in that case. Now normally guys consolidation and individual income statement will only have whose equity involved, only parents equity only. But there can be some more items that are coming. Now for an example guys, if you take consolidated SOFP, you have extra things like goodwill, NCI. Now normally when it comes to the individual SOFP, do you see those items? No, those are not there, right? So these are some other problems that we can face. So two problems. What are two problems? Problem number one, individual SOFP will only have Venus's assets, liabilities, and equity. But consolidated SOFP will have Venus and Pluto's assets and liabilities. Equity, you will have parents equity plus post acquisition reserve. And also other items like NCI, goodwill will be there in the consolidated SOFP but not inside the individual SOFP. Right? Can you guys start writing those points also guys faster over there? Right? 2 points. Right? Start writing those. Anyway, I also will write the answer over here. So first you start writing the new points regarding SOFP. Right? So start writing. Right? When it comes to income statement, right? Venus Co will only include Venus income and expenses, whereas the consolidated income statement will include both Venus and Pluto income and expenses. Okay. Yeah, that also we can add, but usually the down part of the profit we normally don't take when it comes to ratios. Okay, right. Then guys, next one, when it comes to SOFP, right? Venus Corporation, right, only includes its own assets, liability, and equity, right? Whereas the consolidated SOFP includes assets and liabilities of both Venus and Pluto, while the equity consists of post acquisition reserves. Right. Then guys, we can also add also the consolidated SOFP includes, right, goodwill and NCI, which is not present in individual SOFP. Right. Okay, right. Guys, there is another one point that we have to discuss on. Can you guys tell me another one big problem that we have when you compare individual with consolidation? Think and say guys carefully. Okay. Can little bit think and tell me another one major problem that we have when it comes to an individual financial statements and a consolidated financial statements. Okay, right. Yes, very good, Sahla. That's the correct answer. Okay, how about the others, guys? Can little bit think and let me know what is the major problem that we have? Yes, Amjad, it's kind of connected to that. What do we call those transactions as? Okay, exactly. Very good, guys. So Basil, Amjad, Rishwa, now you have got it correct, guys. Intra-group transactions. Right now, guys, you need to understand a small thing. In the individual financial statement, intra-group transactions are there. But when we do consolidation, what do we normally do with intra-group transaction, guys? Do we keep them? No, what do? We always eliminate them. So in the individual financial statement, it will be there, but not inside the consolidated financial statement. Good. Okay, right. So start writing, guys, the last reason over there. Right. The individual financial statements, the individual financial statements includes intra-group transactions. Whereas the consolidated financial statements excludes all intra-group transactions. Okay, right. Right. So guys, with that one, now we have now finished off the 3 markers. So far, guys, we have explained about 11 marks in the paper, right? Okay. Right. All are guys okay with that part? Right. Now, guys, can look at the last part. Based on your answers to part A and B, comment on the comparative performance of Venus Corporation for the year 2007 and 2008, specifically addressing the manager's director's comment. Now, guys, this managing director made 2 comments. What are the 2 comments that he has made? Right? Can you guys little bit go through and see one more time, guys? 2 comments what he has made. One is he is disappointed regarding the gross profit ratio. Okay, because he thought when we get discounted purchases from Luto, the gross profit will improve. Second thing, guys, he is also making a comment telling that the Luto has not been a positive impact on our business organization. So 2 comments he is making. When we buy on discounts, it has not improved our gross profit, and buying Luto has been a bad impact to us, meaning it has not improved. So 2 comments he is telling that way. Okay, right, guys, first of all, can you quickly give a comment about the gross profit ratio, guys, over these 2 years faster? So now they are asking you to comment Venus Corporation with Venus Group. Okay, right, start writing the comment, guys, about the gross profit ratio faster. Right, comment about these 2 quickly. First, tell whether it has increased or decreased. Will you start off that way? Right. Right. First, tell whether they have increased or decreased. Okay, right. So, guys, it's very obvious now. Venus Corporation to Venus Group 2007 to 2008. What has, guys, actually happened to the ratio? It has reduced. It has reduced by 2%. Okay, so let's start writing that one. Will you guys over there? Okay, so let's mark over there. Right, right. Evaluation. Okay, right. Okay, let's start marking. Right. Venus Corporation gross profit has fallen by 2% when compared to the consolidated consolidated gross profit margin. Okay, right. Okay, but guys, can you tell me, I am directly comparing that way, is it actually fair? Right, Now I am telling 2007 gross profit has fallen down by 2%. Is it guys actually fair the way that I'm comparing? No, why? 2007 is only whose answers? Venus. 2008 is whom? Venus and Pluto. Guys, now can you do me a small work? Can you calculate and show me gross profit margin without Pluto first? Okay, I want you to calculate and show me gross profit margin without Pluto. Start calculating that one guys quickly. Okay, without Pluto, I want you to calculate and show me the gross profit margin. Okay, right now I want you to recalculate gross profit, right? Though the paper is not asking, can you recalculate, because then only we can make a proper comparison, right? Okay, calculate that on video. Right. Guys, can you tell me inside this revenue, how much is given by Luto? 5 million, no? Can you guys remember? 5 million was given by Luto. Okay, now calculate and show it to me guys over there. Exactly. 5 million was given by Luto. Okay, right now guys, when you recalculate the gross profit margin guys, what's actually going to happen, right? So it's going to be this way. 39 million, we have to guys subtract the 5 million, correct or wrong? Because that is from Luto. Okay, so if I remove Luto guys, what's going to happen? My revenue is going to be how much? 34 million. Okay, now guys, let's start calculating gross profit. Guys, how do we calculate gross profit margin? First take gross profit. Gross profit should be 7,500. Is that clear? Okay, because guys, understand, when you remove the profit by 5, sorry, my bad, when you remove the revenue by 5 million, what's going to happen to the gross profit? Gross profit should also fall. That also should fall down by 5 million. You understand guys? Simple accounting. No, when revenue goes down, gross profit also should go down. Okay, so gross profit guys will now be 7.5 million divided by how much? 34 million into 100%. Now guys, can let me know what's going to be the correct answer in that case? Okay, very good, Basil. The answer is how much, guys? 22%. Correct or wrong, guys? The answer is actually going to be 22%. Okay. No, that means Amjad, the purchasing cost is 3 million. So when you remove 3 from that, automatically the answer will be the same. Okay. Right. So revenue goes down by 5. Cost of sale also should go down by, in that case, how much? That 3 million. No, but here they have said that these people have sold off all the inventories. No, if I'm not wrong. Guys, wait, when it comes to gross profit, wait, let me check and see, have I made a mistake over there? Wait. Okay. 39 million goes down by this. Cost of sale is 26,500. That goes down by 3. $39 million. Wait, huh? Yeah, I think guys for cost of sale we have to do a lot of adjustments no over there rather than directly taking it as 26,500. Okay. We'll have to do, yeah. The unwinding part normally won't be taken to gross profit, guys. That is normally taken to finance cost. But then on the other hand, guys, we have to do a little bit recalculation for this part. Okay, guys, I made a small mistake with my gross profit. Okay, shall we, guys, recalculate it one more time? Okay. Right. So when I'm recalculating, guys, gross profit, what will happen? It will be this way. Okay. Revenue will be 39 million minus how much, guys? 5 million. That is correct. Okay. So 34 million, guys, will become revenue. Right. Cost of sale, guys, let's recalculate one more time, guys, faster. Okay. Let's calculate cost of sale one more time. Okay. So cost of sale, guys, according to the paper is how much? 26,500. Now first write that down, guys, over there. Okay. First one, 26,500. Okay. Right. Guys, now look at this part. Luto has recognized a revenue of 5 million where the net profit is 2 million. Okay. So first thing, guys, now over there, okay, now revenue 5 million we have removed now. So that's not an issue over there. Revenue 5 million should go down. Okay. Right. Now, guys, can you adjust this and show it to me, guys, faster to your cost of sale? Okay. Can you adjust this and show it to your cost of sale? Since we were able to buy goods, okay, this has resulted in a saving of 500,000. Okay. So if Luto is not there, guys, what should happen to my cost of sale, guys, over there regarding the 500,000? It has to increase or decrease by 500,000, guys. If that is not there, it has to increase by 500,000. Okay. Add 500,000 to that part, guys. Okay. Add 500,000 to that part. Correct. Unwinding, guys, will not affect the cost of sale, but the depreciation will affect the cost of sale. Okay. So remember, guys, in our question, depreciation was how much? 150. No. If that depreciation is not there, guys, what will happen? Cost of sale will go down by 150. Okay. Check and see, guys, now over there. Right. Cost of sale will go down by 150. Okay. Right. Then, guys, what should be the corrected cost of sale, guys, in that case? It has to be 27,000, 26,850. Yes, no? 26,850. Okay. Now, guys, can you check and see what's the new gross profit in that case? Okay. Right. 34 million minus 26,850. 7,150. No, guys. Yeah. 7,150. Okay. Now, guys, can you recalculate 7,150 divided by 34,000 into 100? 21%. No, yeah, very close to the earlier answer, but anyway, 21% is the answer. Right. Right. Okay. Now, guys, can you see a small thing? Look at now what happened. Right. Now, see, when I take Venus Corporation and Venus Group, it shows our gross profit ratio has only fallen down by 2%. It's very comparable. But now, guys, can you see what's happening over here? When I remove Luto, right? When I remove Luto's impact, what's happening to my gross profit, guys? My gross profit is going to be how much? It's going to be 21%. So it shows that without Luto, our gross profit has been impacted very much. It has fallen down by at least how much? At least 13%. There is a reduction. So, guys, now based on this one, can you tell me the director's comment? Now, director gave a comment telling what? Buying Luto has not been very positive on us. Now, based on this ratio, guys, can you tell me, is that statement true or false? That statement is false, because without Luto's performance, your ratio is not even close, right? It has fallen down by 13%. It means that Venus Corporation is not doing well. They are not making enough margins, or maybe their cost of sale control is not good, right? So the director's statement, what he has said over there, is false, because only because of Luto's answer, your ratio is at least close. Okay, so let's start giving a comment on that part, guys, over there, right? Okay, as calculated above. Okay, now let's start commenting. As calculated above, right? As calculated above, right? Venus Corporation individual performance in 2000 X8 has dropped tremendously. Okay, has dropped tremendously. Right. Due to a decline in revenue. Okay. No, but we can tell actually, guys, revenue has increased. No, has dropped tremendously, even though revenue has increased by revenue has increased by even though revenue has increased by 2 million. Okay, guys, you understand now, guys, why I'm telling revenue has gone up by 2 million. Earlier, guys, revenue was 32. No, now revenue is 34. So revenue has actually gone up by 2 million, but right, but the increase in cost of sale has been much bigger. Okay, the increase in cost of sale has been much bigger. As the gross profit has fallen down by at least by 13%. Okay, it has fallen down by 13%. Next line, guys, you can write only by including Luto's performance, the ratio is close to comparable. Okay, that means 32 is comparable to 34 only if we include whose performance? Subsidiary's performance. Therefore, statement made by the director can be considered as false of Luto's acquisition not being positive to Venus. Okay. Okay, right. Guys, can you also quickly give me a comment on no, we don't need, because there aren't any specific reasons to be given over there, no? So we can just tell this and we can finish it off. Okay. Guys, can you tell me the other part, guys, over there? Now, this person, the director, made another one statement. What's the other statement that he made? He's telling that because there were discounts from Venus. Now, can you guys remember in this question, they said something like this: when we are buying products from Venus, we got a discount of how much? 500,000, we got discount. But even with the discount, our gross profit has not improved. What do you guys think about that statement? Right? He is telling when we bought goods from Venus, we got a 500,000 discount. But that has not improved our gross profit. What's the reason, guys, behind that one? Can little bit think and let me know. Okay. About that particular statement that he made. Yes, very good, Amjad. That's the correct answer. Yes. Guys, now even when we bought the goods for 500,000 profit, it has not made an impact on our performance. What is the reason, guys? What is the reason, guys? We can tell. There was a 500,000 gain, but that gain does not show in the performance. It's not shown in the consolidated financial statement. What's the reason behind it? Exactly, because it's a what transaction? It's a intra-group transaction. It's like this, guys. We did make a 500,000 reduction, but the problem is that that 500,000 will not be there in the consolidated financial statements. Why? Because it's an intra-group transaction. Normally, guys, intra-group transactions, what do we normally do in consolidation? It will be eliminated, it will be removed. So even if there is a 500,000 gain, it won't be represented inside the consolidated statement because it is eliminated. So let's write that one, guys, over there. Right, regarding, okay, let's start marking that one. Okay, regarding the other statement made by the director on discounts received from a subsidiary during purchasing has not improved the GP margin is again incorrect. Is again incorrect, as that is an intra-group transaction. Therefore, it will be eliminated from the statement in 2008. So that's why, guys, that one's impact cannot be seen because that will be eliminated. No, so anything that is eliminated, guys, will not be reflecting on the financial statements, right? So that's why you don't see that. Yeah, you can tell now that no. Exactly, but it does benefit the business in the long run, meaning the impact can be seen in the individual financial statements rather than inside the consolidated financial statements for 2008. Yeah. Right. The problem is this is, guys, the 2007 financial statements. No. So in 2007 financial statement, that benefit will not be there. It will be there in 2008 financial statements only. Okay. Because the purchasing has been done in 2008. No. Right. It will be there in the other financial year. Okay. Right. Okay, guys, on the other hand, can you guys quickly give me a comment about the net profit ratio, guys, faster? Okay, can you please give me a comment about the net profit ratio? Just a normal comment can you give me, guys? Now look at this part. Venus Corporation is 28, Venus Group is 25, okay? But without Luto, the ratio is how much? 22%. Can you guys quickly give me the reasons why it has dropped over there, guys, faster? Okay, can you start writing the reasons for me, please? So give comment about all three, yeah, from here to here and also from here, right? Okay, start giving that one, guys, over there faster. Just give one comment, because to be very honest, we don't have much evidence, right? So just give one comment, will you guys, over there, right? So overall, guys, what has happened from 2000 Venus Co to Venus Group, guys, it has actually fallen, and even when we remove Luto's performance, it has still fallen. Okay, so the main reasons are like this, guys. Okay, why has the net profit ratio fallen? What's the main reason? First one, there is a fall in what ratio? There's a fall in the gross profit, because there's a fall in the gross profit ratio that has contributed to the fall in net profit ratio. And to be very honest, guys, I don't find any specific reasons to tell what happened to expenses. So what we can tell is we can just tell that Venus has a poor control on expenses over the last year. So that's why the net profit ratio has fallen. We can tell something like that. Because guys, already depreciation, what happened? Depreciation, guys, we have already spoken when it comes to cost of sales. No, only one thing that we can speak about is what, guys? The additional deferred consideration. Only that we can speak about. Okay, so let's start writing the answer, guys, for that one also. Right. So we can tell over there, right? Right, over the year, right? Over the year, gross profit ratio, sorry, not gross profit ratio, right? Net profit ratio has fallen in both consolidated performance and excluding Luto's performance. Okay, consolidated performance and also excluding Luto's performance. Okay, this could be due to, right, number one, fall in gross profit ratio over the year. Ratio over the year. Second one, right, poor control of expenses and also you can tell unwinding of discount, because that's the only additional thing that I see there. Okay, unwinding of discount. All good, guys? Okay, guys, last part, let's start writing over there ROE. Okay, can you guys tell me two reasons on why it has fallen quickly? Okay, return on equity. Okay, can you guys please tell me two reasons on why it has fallen when compared to the last year? Okay. Yes, very good, Daniel. Very good, Amjad. Right. What are the other points, guys, that you can tell apart from those two? Why it has fallen over the year? Yes, very good, Asya. Right. Those are the 3 points. Yeah, correct, Sazri. That one. Okay. How about you all, guys? What is the reason, guys, why the ROE has fallen over the last year? That is one reason. Correct. Right. What are the other reasons, guys, that we can tell? Yeah, Basil, regarding that, this one, what you had asked me regarding expenses, it cannot be considered as generic. You know why? Can little bit check and see over here and here what has happened, right? Right now, see over here, 21 million to 11 million, our expenses are how much? 10 million. 26 million to 12 million, our expenses are how much in that case? 14 million. So our expenses has actually increased over the last year, right? So it's not a generic comment because our expenses has actually increased from here to here, right? So we have a poor control of expenses. Right. Okay. So guys, ROE, guys, now normally ROE, guys, what are the two things what we have, guys, over there? One is profit, other one is what? Equity. So what has happened to profit, guys? Profit has actually decreased. So that ROE has gone down. What's the other major contribution, guys? Equity has actually increased. Equity has increased, guys, because of these reasons. Number one, can you guys remember in the paper they said when we are buying the subsidiary, how did we buy subsidiary? By going for a share exchange. So equity has gone up, meaning the ROE will fall because denominator is big, no? And also, guys, on the other hand, can you also see last year we don't have NCI, this year we have NCI. So meaning the equity is even more bigger. Because of those reasons only, guys, what has happened? Our ROE has fallen down. All okay, right? Let's quickly, guys, write those, right? So let's summarize it faster, right? ROE, right, has fallen over the year, right, due to, right, the following reasons. following reasons. Okay, number one, reduction in profit. So if you want, you can write reduction of profit due to the points stated above. You can tell like that. Okay, right, reduction in profit, right. Increase in equity, as there is a share exchange taking place, and the inclusion of NCI. Okay, inclusion of NCI. Daniel, normally when fair value increase, we don't take it as a revaluation increase, because normally when fair value increase, we add to property and then we deduct that from goodwill. No, we normally don't take it as a revaluation gain, because double entry is goodwill account credit, asset account debit. Okay. Okay. Right. Now guys, shall you quickly write down the conclusion over there faster? Right. Let's quickly write the conclusion over there. Right. Conclusion. Right. The overall performance has dropped over the year, not because Luto has been a poor acquisition, right, but mainly due to the drop in the individual performance of Venus. Okay, mainly due to the individual performance of Venus, right? And then guys, you can tell below this one, right? Right. The benefits of purchasing Luto may be obtained after a few years of acquisition. Okay, benefits of purchasing Luto may be obtained after a few years of acquisition. Because guys, now you need to understand, now we have bought Luto and it has been only how many months so far? Only 6 months now. Now sometimes guys, when you buy companies, the synergies and benefits that you get from these companies may take a little bit time to realize. Now just because you go and acquire a company, sometimes the benefits don't come in immediately. No, it may take some time for you to get the benefits. So since it has been only 6 months, okay, so you may need a little bit more time for you to get these synergies. Okay, yeah, exactly. In the long run, you might get these benefits. Right. So guys, with this one, now we have finished off our first consolidated ratio evaluation. Next week, guys, we will be having 3 classes: Thursday, Friday, and Sunday. So another 3 ratio in consolidation, I will be picking up during the next week. Okay, right. Right. Now, guys, let's start another one question, guys, over there. Right. In your exam kit, could you guys please go for this question over here? Gold Corporation. It's a consolidated income statement. Go to that one. And also, guys, there is another one income statement that I have to complete. I did halfway. Okay, right. Can you guys little bit go to that part, please? Right. Please go to Gold Corporation, a consolidated income statement question. Right. Gold Corporation. Okay. Right. Okay. Now, guys, can all of you all guys take out an Excel sheet this way? Right. Now can you take out a that one remarks we are going to focus on next week. Next week, 3 classes, we are going to focus on that. Not necessarily, but if you have that with you, it will be easier for you to comment. So sometimes even in the exam, even if they have not asked, if you can calculate, then it will be better. Right, okay. So guys, and can you put the heading guys over there for me, please? Right, Gold Corporation, right, consolidated income statement. Okay. Gold Corporation, question number guys 453. Okay, right. Gold Corporation. Gold Corporation. Okay. 435. Okay. Right. So guys, start. First we'll write the format. Okay. Consolidated income statement. Okay. Year ended 30th September 2000 X2. Okay. Guys, listen. In this question, okay, now guys, first thing what you should understand is guys, I think 2 students had asked me the same question. First thing guys, remember cash flow will not come as a full question in your exam, right? When you take out the textbook guys, they have specifically explained that for section C, cash flow will not come as a full question. If cash flow does come for the exam, it will be maximum 5 marker in section B. And guys, those who were there in Thursday class, I gave you all a homework. No, what's the homework question? MIMS Corporation. In that MIMS Corporation, guys, down part, they have actually asked us to prepare investing activity and financing activity. So there, guys, I will be explaining cash flow over there, guys. But apart from that one, guys, there is no point us doing a full cash flow question because it won't come for the exam in section C. Right? If it comes maximum, it will come only 5 marker. That's it. More than that, it won't come. Sometimes it's 3. It won't come at all even. Right? So therefore, that's why guys, I'm not focusing on that part. Next week in MIMS Corporation question, I'll discuss the cash flow area on how to do. All good? Because it's better guys if we invest time on more questions like ratios because that's a sure thing. Okay, that's the reason. Okay, right. So guys, start writing the format, will you? Right. First one guys, we have revenue. Right. Then guys, we have cost of sales. Okay. Right. Then guys, gross profit. Right. Leave one line. Distribution expenses. And guys, remember March first week also I will be working with you all. Okay. Until you all sit for the exam, we will be having classes. Right. Okay. Right. Next one guys, administration expenses. Right. We'll check and see Basil. If time permits, I will go through that. Okay. Or maybe even I can ask you all what you can say. Let's say now I thought last October batch I had done cash flows for them. So if that recording is there, I will share it with you because time is the biggest issue that we have. Are you okay with that if I can upload the October one and give it to you regarding cash flow, what we did over there? Okay, no, that's fine. Yeah, until you all sit for the exam guys, I'll be having classes. Okay, right. Administration expenses, last one, investment income. Right, next one guys, after investment income, can you guys leave one line? You know why I'm asking you to leave one line? Because there can be associate profits no, for that. Okay, so leave one line. Next one guys, finance cost. Okay, next one guys, we have profit before tax. Okay, then we have over there one half is there. No? So I actually asked them to upload 2 classes, December 1st and December 8th. So that's technically 3 questions. Okay, next one guys, income tax expense. Right, then guys we have profit for the year. Okay. Profit for the year. Okay, then guys write the other two sentences. Profit attributable to, okay, don't forget that one. Profit attributable to, right, first one is home guys, parent, right, the other one is NCI. Okay, profit attributable to parent, the other one is NCI. Usually Amjad, we always write distribution only first before administration nowadays. Okay. Sure, I'll share it with you. Okay. Okay. Guys, listen. Apart from that one, guys, in this paper, they are also asking students to calculate goodwill. Okay. Apart from this one, they are also asking to calculate goodwill, right? So, guys, separately, I am also going to write the goodwill equation. Okay, right. So, let's mark that one also, guys, over there, goodwill. So, normally, guys, how do we calculate goodwill, guys? First thing we need what? Investment. Okay. What is investment, guys? Basically, consideration. Okay. Investment slash consideration. Consideration. And guys, to that, what do we normally add? We add fair value of NCI. Then from that one, guys, normally what do we subtract? Net assets at acquisition, which is basically working number 2. So remember guys, because we are doing an income statement, this net assets at acquisition working number 2 separately we have to prepare. Is that clear? Okay, separately guys, that has to be prepared, right? So that one guys, I'll just mark it over here, right? Working number 2. Okay, what is working number 2? Right. Net assets of subsidiary. Okay, so normally guys, for net assets of subsidiary, what are the normal things that we have? We normally have guys share capital. We also have retained earnings. And also what is the other thing guys that we can have? Fair value adjustments. Both we can have. Okay. Which one, Basil? Which point? And then we have guys over there goodwill. Right, okay, now it's like this. Now normally when you do SOFP, working number 1 is group structure, working number 2 net assets of subsidiary, no. But when we do income statement, the working number 2, the net assets of subsidiary separately we are not preparing, no. Okay, because when we do income statement, we just start working number 1 group structure, working number 2 NCI profit, and we start the question. The net assets of subsidiary working we normally don't do when it comes to income statement, but we do when it comes to SOFP. That's why separately we are doing that part. Are you okay with that? Why we are separately doing that? Yeah. Okay. And also guys, on the other hand, can you also keep ready for me which equation, right? The net profit of NCI. Okay. NCI profit working. Right. So normally guys, NCI profit working, how does it go? Profit after tax of subsidiary, then minus fair value depreciation, minus URP, that is when who is the seller? When subsidiary of parent, guys, who has to be seller in this case? Subsidiary, no, subsidiary only has to be seller. Okay, when S is seller, correct. Okay, and also guys, on the other hand, who is the next person? We also have minus impairment. Okay, minus impairment. Done. So this will be adjusted profit. Right, can you guys please keep all of these ready for me? Okay, please keep all of these ready. Sure. 1 minute. Okay. Guys, now can you do me a small work? Now, once you have guys set up everything, okay, can you guys mark and show me the group structure? And also guys, can you copy down these numbers and show it faster? Because normally when you do income statement, what's the approach? First, you should do working number one. What is working number one? Group structure. Show who bought whom, what percentage, how many months. Once you do that, what is the second step that you should do, guys? You have to copy all these numbers, okay? All these numbers that you see, right? You need to, what you can say, copy it and show. All okay, right? Can you guys do that part first of all for me, guys, faster? Draw the structure and also mark and show me all the numbers. Do working number one and copy the numbers. 1 minute, right here. Okay, start, will you? Once you do that part, I will show the answer and then let's go for the break. And after the break, let's continue the question. Okay, right? Finish it off, guys, this part over here quickly. Please do and show working number one. Yeah, okay. So guys, let's start off with guys over here, working number one. So guys, I'll do it on the side, yeah? Okay. Now guys, how does this question go? Working number one, what happened, right? It says G acquired 90% of S. That means guys, there is a how much percent NCI? There is a 10% NCI. And also guys, how many months subsidiary? This is a 9-month subsidiary. Correct or wrong, guys? Okay, it's a 9-month subsidiary because guys, see, they bought the company on January 2000. Question is for September 2000. So this will become exactly a 9-month subsidiary. Now, once you understand the group structure, okay, you just have to do it this way. Who bought whom? NCI is how much? How many months? Once you do that part, now guys, I want you to start copying the format. Okay, so let's start copying, guys. 103,360 parent plus 60,800 subsidiary into 9/12. Guys, once you find the number of months, subsidiaries, income and expenses, you have to show how many months. Okay, right. Next part, guys, we have cost of sale. So cost of sale, how does it work? 81,920 plus 41,600 into 9 divided by 12. Gross profit, you should not copy. Okay, right. Distribution expenses, copy that one, guys, over there. 2,560 plus 2,980 into 9 divided by 12. Administration expenses, copy that, please. 6080 plus 3740 into 9 divided by 12. Okay, investment income, only parent, no, copy 800. Finance cost, only one person, copy that, 672. Profit before tax, please don't copy. Tax, we have to copy. 4,480 plus 2,560 into 9, divide the whole thing by 12. Okay, profit for the year, no need to copy. Okay, no? Right. Okay, right. So guys, once you're done this part, guys, now you all can go for a half an hour break. Come back at 11. At 11, guys, we will then continue this question. Okay, right. Can you guys go for a break and come back then? That's it.